Yeah, it's great to be here again. I look forward to attending in person in the future. I'm extremely confident that level 5 or essentially complete autonomy will be will happen, and I think it will happen very quickly. I think at Tesla, I feel like we're very close to level 5 autonomy. I think I remain confident that we will have the functionality the basic functionality for level 5 autonomy complete this year. And I look forward to visiting Giga Shanghai as soon as possible. It's really impressive the work that's been done. We expect over time to use more AI and essentially smarter software in our factory, but I think it will take a while to really employ AI effectively in a factory situation. I'm always amazed by how many smart, hardworking people there are in China, and how much positive energy there is, and that people are really excited about the future and want to make things happen. So I can't wait to be back. Yeah, it's great to be here again. I look forward to attending in person in the future. I'm extremely confident that level 5 or essentially complete autonomy will happen, and I think it will happen very quickly. I think at Tesla, I feel like we're very close to level 5 autonomy. I think I remain confident that we will have the functionality the basic functionality for level 5 autonomy complete this year. And I look forward to visiting Giga Shanghai as soon as possible. It's really impressive the work that's been done. We expect over time to use more AI and essentially smarter software in our factory, but I think it will take a while to really employ AI effectively in a factory situation. I'm always amazed by how many smart, hardworking people there are in China, and how much positive energy there is, and that people are really excited about the future and want to make things happen. So I can't wait to be back. Yeah, it's great to be here again. I look forward to attending in person in the future. I'm extremely confident that level 5 or essentially complete autonomy will happen, and I think it will happen very quickly. I think at Tesla, I feel like we're very close to level 5 autonomy. I think I remain confident that we will have the functionality the basic functionality for level 5 autonomy complete this year. And I look forward to visiting Giga Shanghai as soon as possible. It's really impressive the work that's been done. We expect over time to use more AI and essentially smarter software in our factory, but I think it will take a while to really employ AI effectively in a factory situation. I'm always amazed by how many smart, hardworking people there are in China, and how much positive energy there is, and that people are really excited about the future and want to make things happen. So I can't wait to be back. Yeah, it's great to be here again. I look forward to attending in person in the future. I'm extremely confident that level 5 or essentially complete autonomy will happen, and I think it will happen very quickly. I think at Tesla, I feel like we're very close to level 5 autonomy. I think I remain confident that we will have the functionality the basic functionality for level 5 autonomy complete this year. And I look forward to visiting Giga Shanghai as soon as possible. It's really impressive the work that's been done. We expect over time to use more AI and essentially smarter software in our factory, but I think it will take a while to really employ AI effectively in a factory situation. I'm always amazed by how many smart, hardworking people there are in China, and how much positive energy there is, and that people are really excited about the future and want to make things happen. So I can't wait to be back. Yeah, it's great to be here again. I look forward to attending in person in the future. I'm extremely confident that level 5 or essentially complete economy will be
$1 million. It feels like a university giving up its endowment as it goes into a crisis, right? So that decapitalizing the company, it was a way to give the $500 million a 2,000 people, and you're going to be worse off in a decade than you are today. Okay, That's operationally hopeless, right? And then on the balance sheet, if somebody says we're not even thinking about raising interest rates, it means for the next 4 years you're going to get 0% on your money, and it's going to be worth half as much in 36 months as it is worth today. And the balance sheet is hopeless.
And this is all before we even see the persistently high inflation that we're seeing now, right? This was just from a market structure standpoint of this had been going on pre-COVID, got accelerated during COVID. You started to recognize this again last year. If you go back and you look at the inflation numbers in Q3, Q4, I mean, it was obvious that we were increasing or accelerating, but we weren't at 5% CPI for 3, 4, 5 months, right? Now is a much, much different situation. So at what point do you switch from this as purely a defensive like treasury strategy of we want to take the cash on our balance sheet and put it in an asset that we can protect ourselves, protect our purchasing power, to then it feels like you made the switch to go offensive? That first bond offering was an offensive move.
I think you called it right there. I think that it's a defensive strategy through the Dutch auction. We had to do the Dutch auction to provide a graceful transition for our shareholders to get long Bitcoin, right? You're either long Bitcoin or you're selling out to us at a premium, one or the other. And then from that point, Bitcoin started moving up and our stocks started moving up. And then we realized that like the conservative thing to do is just stop there. And if we'd stop there, I mean, we would be all equity, $475 million invested at $11,000 a coin or something. And that's not a bad result, right? We would have made 6x our money. But what we realized is we could borrow money at 75 basis points. And you know, Bitcoin's up 171% a year every year for a decade, right? If you can borrow money at 1% and invest it at 171%, your arbitrage is 170% on how much? Well, how much do you want, right? Like, where are you going to stop that?
When you borrowed at the 75 basis points, I was impressed. But then you followed it up and you borrowed even more at a 0% interest rate, if I remember correctly. What was the second offering?
Because the first offering came out, the strike was 398. Bitcoin kept moving up. Our stock kept moving up. Eventually, that bond was the best performing bond of the entire year. Right, Anthony? What I'm saying is of every single corporate bond sold in the year 2020, every convert, every junk bond, everything sold, every municipal bond, whatever you could imagine, the single best performing bond was MicroStrategy convertible bond, where you could have doubled your money. You know, at some point it was trading insane amounts, like triple, you know, your money on a bond. Okay, so we had good success there, and of course Bitcoin kept moving up, and our stock kept moving up, and we realized by February that we could do another offering. The next offering was we came in the market offering $600 million. The first one we started with $400 million. This time we started with $600 million. But again, it was oversubscribed. We upsized it, exercised the green shoe. It became a $1,050 million offering. And the range was 50 basis points to 0. So we struck it at 0. And you know, up 50, 37, I forget the number, but we ended up having a 50% premium or 47%. I forget exactly. It was a high premium. It was a low coupon. The strike price is $1,432 a share. So now put this in perspective. This is 10 times the price of the Dutch auction, you know, some number of months earlier. Now, so why'd we do that? Well, because if you could borrow $1 billion at 0% interest and invest it in something going up 170% a year,
pretty good trade.
Why wouldn't you do it, right? Like every single business on earth that's debt financed presumably is borrowing money to invest in something which is going to return a higher yield than the cost of the debt. Now, I want to pause here and make one point. the reason that I was sensitive to inflation, was I immediately saw the inflation in March and April in the stock market, right? Because my inflation bogey wasn't, if I were to go to all my investors and say, I got $500 million, I'm investing it at 2% interest and inflation rate's 1%, they wouldn't have given me a pat on the back. They would have said, the S&P index is moving up 10% a year. Your hurdle rate, your cost of capital is not 1% or 2%, it's 10%. And maybe you're getting 5% yield on a piece of debt, then I don't hold my nose, but you're losing 5% a year. Half-life of the money is 12 years. Okay, fine, but like you shouldn't be holding it. You should be buying your stock back or buying another company with that. Sitting on that cash it doesn't make any sense. Saifedean says the dollar-weighted monetary inflation rate across all currencies for the last 30 years is 14%. Interesting number he comes up with. 14% is the inflation rate of the currencies. Now, that would be the inflation rate on scarce desirable assets or any portfolio of assets. And if I look at my screen right now, over the last 10 years, the S&P 500 is showing 14.15% interest, or 14.15% compounded annual growth rate. NASDAQ's up, 19%, gold is up 20 basis points, nothing. Bitcoin's up 170%, right? And long bonds give you like 2.5%. So the monetary inflation rate equals the S&P index. Well, the traditional way you'd value a stock is you would put a risk premium on it, and you would say, well, your cost of capital is the return plus the risk premium. So it used to be we'd think, well, there's a 3% risk premium, and the inflation rate then would be 11%. But I think that if you buy the S&P index, you're kind of in theory stripping out the risk because you're buying 500 companies. So the S&P index can be viewed as a proxy for monetary inflation. And the question of inflation is, what's your inflation rate? Well, what do you need to buy? If you're a consumer, then your inflation rate might be CPI if you agree to buy what the Federal Reserve tells you should want, right? And the market basket of things in the CPI is what the government says you should want in your life. But they never included a Picasso or a jet or a yacht or a house in Miami Beach in that market basket.
A step even further than that is the number 14% is very interesting, because my understanding is if you go back, obviously CPI used to represent a cost of goods index. So what is literally the change of price of individual goods year over year over year, and that's how inflation was measured. Now, obviously, we have a cost of living index, which is what you're talking about in terms of, well, here's the things that we think you should want. Here's the general weightings of these specific assets or consumables inside of this basket, and then that's kind of our moving target for this measurement of inflation. But if you were to go back and look at the cost of goods index based on how it used to be calculated for CPI and apply it to today's numbers, you get about 14%. And so not only is the S&P, not only is that monetary inflation, but also that cost of goods index based on the original calculation of inflation is around 14% as well, which is, there's coincidences in life, but it seems to keep coming back to somewhere in that kind of mid-teen number when we're trying to understand what is that inflation.
Yeah, isn't it interesting? The hedonic adjustments kill you. But on the other hand, and I say this oftentimes, inflation is a vector, and what I mean is you got to use multi-dimensional arrays and linear algebra to even start n-dimensional linear algebra to even start to deal with the issue. Another way to say it is you can calculate a different inflation rate for any person in any jurisdiction based upon their mix of products, services, and assets they want to acquire. And so common sense says a person that wants to acquire a set of manufactured goods and wants to watch streaming YouTube has a lower inflation rate than someone that wants to buy Picassos. Now, what if you want to be rich? If you want to be rich, your inflation rate is very high. because you have to acquire assets. If you want to be middle class, your inflation rate is different. So back to why I did what I did. If you're the CEO of a publicly traded company, your inflation rate is the cost of capital. And the cost of because your shareholders hold you to that cost of capital. If I go to a public investor and I tell them my goal is 2%, and they're saying, well, the S&P is up 14%, then I'm undershooting their goal. Their index is the S&P index, right?
Correct.
So the inflation rate for an investor is the index. Now, of course, different investors have different indexes. If you go back to the strategy, if you're a fixed income investor, you've got like a sovereign, or corporate fixed income rate. You've got the junk bond index, you've got the corporate, investment grade index, you've got the sovereign debt index. You have capital structures in the world that have different indexes. Someone that wants to send their kids to an Ivy League school and wants to have a house in the Hamptons, right? They have a different index. Someone that wants to be obscenely wealthy has a different index, right? So that's why you could have everybody talking past each other, because and of course, if you keep changing the indexes, the S&P 500 index changes, right? They rebalance it. The PCI, the PCE indexes, they get rebalanced. So the indexes are changing. And if you allow someone else to feed you the index they want you to focus on, well, you can see it right now, right? The official inflation rate in Canada is 4%, but the housing price is up 15%. The official inflation rate in the US is 5%, but the Case-Shiller index is up 27%.
Something big.
Okay, and of course, it all comes down to deciding what you want in life. Now, in the last 12 months, the S&P is up 34%. If you're sitting on $100 billion worth of cash and you put it in the S&P index, you got $34 billion back. You have $134 billion right now. Mm-hmm. If you held it in conventional treasuries, you're short $34 billion. If you convince yourself that the inflation rate was 5%, or if you convince yourself that you could say, look, my treasury index is just the short-dated sovereign debt index. And so as long as I'm beating the 20 basis points, I'm good. And by the way, like if I have a bunch of money sitting in a bank, my bankers come to me. I've literally had bankers from the big wirehouses. They came to me when I'm sitting on 100 million or 200 million in cash, and they go, we can get you into one of our money market funds that'll yield 22 basis points. And that's much better than the 9 basis points. And they're selling this to me. There are people in suits that make a lot of money, and they're selling it to me. And you read the prospectus, and the prospectus is they're going to do something, and they're going to charge you a 27 basis point fee to generate 22 basis point yield to you. You're literally...
They're making more money than you are.
You're giving 60% of the yield to someone in a suit that's giving you a service to get you 5 basis points more. But there are people that convince themselves that this is a good idea, right? Mm-hmm. And we come back to that in a second. It's an important truism in the market. Why is it that everybody hasn't bought Bitcoin? Mm-hmm. People ask that, right? All the Bitcoiners wonder, why don't all these investors buy Bitcoin? And the answer is, because there's trillions of dollars of capital locked up in capital structures that are chasing a different index, mm-hmm. right? There's trillions of dollars of money sitting with people that think that inflation is CPI. Mm-hmm. There's trillions of dollars sitting in real estate funds, and they're trying to beat CPI. If I got rents and I'm raising them at the CPI rate and I'm happy with it, there's trillions of dollars invested in fixed income funds where they have to beat the junk bond index or beat the corporate index or beat the sovereign index. And if they beat the sovereign index, if I have $20 billion and all I got to do is beat, the junk bond index or I get paid, then I'm getting paid to invest $20 billion to get 50 basis points more.
What happens to those people? Let's say that inflation isn't 5.1% or 5.4%, wherever it comes in, on a monthly basis now. And we all agree it's something that is higher, but there's disagreement on how much higher. Is it 6% or is it 14% in terms of the actual inflation number? What happens to all the people who are using CPI as the benchmark? Do they just succumb to the inflation over time and continue to lose money until they wake up, or something else?
I think a lot of people have a hybrid situation. Like, for example, let's say I run a real estate trust or I run a real estate company and I have $100 million a year worth of rental income. Mm-hmm. It's capped at CPI. The leases are signed 10 years, 20 years, 30 years duration, 5 years duration, and then you've got all the trade relationships. Like I can't go to the people that rent my building and tell them that the inflation rate's 14%. Right? I mean, would you pay a 14% increase in your rent here? No. So there's a certain inertia in parts of the economy where they're going to move up at CPI, or they're going to be flat, or maybe they can do double CPI. But at the same time, maybe you're the person running that real estate company. You're thinking, well, I'm going to take my cash flows and I'm going to invest them in. Would you invest them in a stock that you thought would go up at CPI? Or would you invest them in the S&P index if you thought you would get CPI? Not really. Yeah. So what you have is you have people that are sweeping their cash flows from an operating business that's low growth, mm-hmm. and they're putting in the S&P index. Mm-hmm. If
they're looking for the growth to come from the investment.
Okay, the S&P is up 34%. How many companies in the world generated 34% more cash flow, or raised their prices by 34%, or grew their revenues 34% in the last 12 months? Mm-hmm. Not many, right? Yeah. 98%, 99%. They're in a fiat operating system where they're going to raise their prices or generate cash flows at a rate slower than the rate of monetary inflation. Mm-hmm. But those same people will turn around and they'll buy Bitcoin, mm-hmm. or they'll buy property, or that you may buy property that is going up faster, right? There's not a single commercial rent. There's not a single commercial lease, I think, in the world where they raised the price of the rent 27% in the last 12 months, right? Mm-hmm. At least I can't imagine if you had a lease, no one's got it capped at the Case-Shiller index. So on one hand, residential property or other types of property could actually be accreting at a much higher rate, while your rents don't accrete at a higher rate. So you're taking duration risk. So I guess the more important point is, there's a lot of capital. When we think about capital structure, mm-hmm. it's like $500 trillion to $900 trillion of capital floating around there. It's locked up in structures. Some of it is in currencies, and it can move rapidly. Some of it is invested in companies that can't, mm-hmm. right, move rapidly. Some of it is tied up in equity. Some of it is tied up in debt. Some of it's tied up in a trust. I have a trust. My trust gave $10 million to a financial advisor or to a company whose strategy is investing in mid-duration corporate debt. And every year I review their performance versus their index. And over the course of a decade, I might start to shift small amounts out. But I think that the capital is structured in such a way, there's enough inertia in the system that it could take 30 years. Yeah, for the capital to get reallocated. Like we're waging a war on the 60-40 portfolio, right?
Is it dead?
How long will it take before people allocate that as 65-35 or 70-30, right? It takes a long time. There are people still invested in gold. You and I joke about that. Gold's been failing for 12 years or something like that, right? Gold's the same price as it was when Bitcoin was invented, and yet an aggressive move would be a macro investor allocating from 50% gold to 45% gold and 5% Bitcoin, and that's a year's work.
Yeah. Let me ask this question. Retail investors or individuals, I think, over the last 12 years or so, took Bitcoin and as a generalized group, it went from a contrarian idea or contrarian trade to a consensus trade. There's now 100 plus million people around the world that have decided, hey, this is good enough for me to go ahead and store some of my value or economic wealth here. And so you can argue that contrarianism became more of a consensus. We now, over the last maybe 18 months, have seen in the financial or institutional finance world more people jumping into the game. And so definitely some shift from pure contrarianism to now a little bit more of a consensus. Everyone has to have some sort of Bitcoin strategy. You can't simply just say, oh, it's just for drug dealers, it's just for criminals. You at least have to have had a conversation now because Fidelity, Paul Tudor Jones, Stanley Druckenmiller, many others have all now started to participate. What does it take for public companies where I basically break down, there's two groups, right? There's yourself, Tesla, and Square as the three major publicly traded businesses that are multi-billion-dollar companies that have pursued a treasury strategy that includes Bitcoin. And then there are all of the publicly traded crypto native companies, whether they're miners, whether they're places like Coinbase, et cetera. It's still contrarian in the public markets to have Bitcoin on your balance sheet. What does it take to get the shift that we've seen in those other two cohorts to now get it to a consensus type, movement or idea?
I mean, I think there's some, you could check off catalysts that are impediments that will become accelerators. First of all, regulatory clarity, right? If you're seeing support for, let's start with the most basic issue. Is Bitcoin an asset or a currency? Okay, the word cryptocurrency is a very politically charged word because if Bitcoin was a currency, it's in opposition to the US dollar, okay? And if it's an asset, it's in opposition to gold. Okay, so just resolving the fact it's a digital asset, not a digital currency. Most people, how many public speakers, how many well-regarded investors have made negative comments about Bitcoin over the past 12 months because they mistakenly think it's a currency and they think they're sticking up for the dollar, right? Many. Like, I prefer the dollar. So if you understand it's a digital asset, a scarce store of value, speculative digital asset, that's how politically correct people would refer to it, right? And anybody else would say it's just a digital asset or a store of value asset. The first impediment is just understanding that and educating the market that it's a digital asset. I think the second impediment is getting over the issue of is it a threat to the powers that be and will it be banned? So first, what is it? It's an asset. Second, will it be banned? Okay, well, no, we're not going to ban cryptocurrency. We're not going to ban Bitcoin. It's going to be around here. So those two checkboxes are huge. I think the third checkbox is, can I actually buy it via my existing bank? Every publicly traded company has been doing business with probably the same bank for 30 years, Pomp. Some have been doing business with the same bank for 50 years. Some for 100 years, okay? If you trace it. To have adopted a new banking relationship is not a one in a decade thing. But public companies don't change in a decade, right? So if I could buy this directly through Bank of America or JP Morgan or Citigroup, et cetera, I think that makes a big difference. If I have to go to an institutional grade Bitcoin exchange, that's a 1-year exercise in due diligence. Right?
There's friction to doing it.
There's two issues, right? One is before you give $1 billion to a counterparty, you have to inspect their accountants, their legal teams, their licensing, their executive team. Would you give $1 billion to a private company that's new, right? It's like, that's a huge hurdle. And the second is they're not FDIC insured, right? They're not. The imprimatur being backed by the U.S. government means that, in any liquidity crisis, the Federal Reserve gives you $10 billion or $100 billion. How much money did you need, right? And that's what the big licensed banks have. And, the last holdout that wasn't doing that was Goldman Sachs. In the great financial crisis, they broke down and they became a bank, right? And it matters. So If you want to move huge sums of capital, right, at the point that some of the major banks handle the asset, that makes a big difference because it checks a lot of boxes and people are pretty conservative about that. I think the next hurdle is accounting.
Explain what this problem is, because I don't think a lot of people understand how big of a problem this is.
Yeah. It's a source of massive inertia because every publicly traded company is running on GAAP accounting. And so we're publishing our GAAP balance sheet and our P&L every quarter. And investors are reading the P&L. And the whole point of GAAP accounting is, in theory, I ought to be able at a glance in 30 seconds, look at your balance sheet and know how much capital you have. And in 15 seconds, look at your P&L and know whether or not the business is well run. And when the GAAP accounting aligns with the underlying business, then you can do that. But when it gets out of alignment, then you have to adjust it with pro forma accounting, non-GAAP accounting, or adjusted accounting. And when you get to adjusted accounting, it goes from being a 30-second inspection to a 30-minute thing. And you know how difficult it is to communicate a 30-minute concept to the world? Very, very challenging. So the issue right now, and the issue when we got into Bitcoin is no publicly traded company held any material Bitcoin. So the accounting treatment was probably appropriately conservative. The most conservative accounting treatment you could imagine is indefinite intangible. And what indefinite intangible accounting means is you buy something, you test it against the market continually, you take the lowest bid and you mark the value of the asset down to the lowest bid at any point in the history of your ownership. And you treat that not as an investment, but you treat that as a loss in the core business, the operating business. So if you have a business that makes $100 million a year and it's run perfectly, with a perfect pegged 20% operating margin, right? If you buy Bitcoin and Bitcoin trades down for 1 hour and trades back up again, you might have $100 million operating loss. Mm-hmm. And then you would be showing the business made no money this year on a GAAP basis. So now you're an outside investor and you're staring, you're saying, what happened to the software business? It looks like the operation got wrecked. If I made 1 million decisions poorly, I probably couldn't go from 100 million in cash flow to zero, right? Mm-hmm. Or if I did, it'd be challenging. Or on a Saturday night, someone could flash crash something and you would have $100 million loss showing on the operating statement. So indefinite intangible means you take the volatility as an operating loss on your P&L and you take the theoretical worst case. The theoretical worst case would be, I buy Bitcoin and I wait for the lowest price ever and I sell it all. Mm-hmm. Okay. That you take the theoretical worst case and you represent that as the status. So when you print your quarterly results or you print your annual results, you want a simple example. You buy $1 billion of Bitcoin, it trades down to 500 million, then it increases to $1 billion, then it increases by a factor of 10 to 10 billion. If that's the fact pattern, when you close your books under indefinite intangible, your books say you have $500 million of assets and it says that you lost $500 million in the operating business and the money's gone. That's what GAAP accounting says. Mm-hmm. In actuality, you might have a statement that says you have $10 billion of assets and it looks to the casual observer like you generated a $9 billion investment gain. Mm-hmm. So now how do you fix it? Pro forma adjusted accounting. You have to create a schedule, a reconciliation. But now what have you done? You've just made first of all, you've made the investor's job 100 times harder. Mm-hmm. And investors got to read all the pro formas, think about it, and then they've got to reverse it out and figure out what really happened in the rest of the business, right? And then they've got to figure out what's your balance sheet really look like. And then the second problem you have is your statements become non-comparable over time. Like, for example, if I look at my balance sheet on a GAAP basis today versus a year ago, right? Bitcoin could go up by a factor of 100. The balance sheet doesn't change. So when you're comparing quarter versus quarter, there's no information there because you're suppressing it, right?
Yeah.
And then if two companies have Bitcoin, one company has 100,000 coin and one company has 10,000 coin, and Bitcoin goes up by a factor of 10, neither company shows an investment gain. Neither company shows a balance sheet adjustment. And so how do you compare one company to the other company if you're trying to make a rational investment decision? So things become non-comparable across securities, and they become non-comparable across time. And you're invited as an investor to create your own set of pro forma systems to compare it yourself, which is like 1,000 times harder. So that's an impediment for a public company or for a company that relies upon GAAP accounting. But here's where it's really an impediment. Like, why can MicroStrategy do it? Well, because we rotated our shareholder base to be long Bitcoin, and because, fortunately enough, we were able to build a substantial Bitcoin position. So now, if you know that MicroStrategy has 114,000
Bitcoin.
Yeah, if I have 114,000 Bitcoin and 114,042 Bitcoin, all you have to know about MicroStrategy is take 114,000 and you multiply by the price, and you know that we've got that much. But let's say that you were Google, or you were Apple, or you were Facebook. Well, you've got all these other businesses, or Amazon, and now you're trying to decompose the businesses. And if they buy a big Bitcoin position, then what looks like a pristine P&L, everybody debates, is Apple's gross margin going to be 38% or 38.5% this quarter? And that's a big deal, right? I mean, there are people who take victory laps on getting within 1% of the gross margin. Well, your gross margins would totally all your margins get blown out of the water from the volatility, the accounting volatility of the Bitcoin. So
how do we solve it? What is the change that needs to be made where you would say, okay, the system we have right now is an issue and it's an impediment. If we move to X, that's the solution in your opinion?
Yeah, well, I joke with people, right? Like, you'd be better off buying baseball cards or art or just about anything than buying Bitcoin from an accounting point of view, because if I went and bought sculpture or, some random anything, normally the test would be like once a year, you check to see if the asset's been impaired. But checking to see if an asset's impaired occasionally is much better than checking to see if the asset's impaired every minute of the day, right? So there are different types of accounting treatments, but if you were to buy $1 billion worth of a security, like an ETF, like one immediate fix is you buy $1 billion worth of a Bitcoin ETF. It's not property anymore, it's a security. If you're owning a security, generally accounting says you value securities based on fair market value or fair value accounting. So that means that if it doubles, you would show an investment gain. This is the Warren Buffett's accounting for Coca-Cola stock or for Apple, right? So fair value accounting is applied to securities. Fair value accounting is applied to certain other things. If the accounting goes from indefinite intangible to fair value, in that case, then you would be showing the $10 billion of Bitcoin as an asset on your balance sheet. And then you would show the gain or loss as an investment, what they call below the line adjustment. Like on a quarter where it's up $2 billion, you would have a $2 billion investment gain. And a quarter where it's down $500 million, you'd have a $500 million investment loss. And that provides more clarity. It's kind of a benefit to investors because an investor can separate the gain and the loss from investment activity from the gain and the loss from operating activity, right? And that helps you to figure out, is the core business healthy? And If Warren Buffett prints like $3 a share or some large amount of EPS, I want to decompose it into how much of it was from the stock portfolio versus how much of it was from the operating businesses, right? And then I can extrapolate out rationally. So ultimately, I think fair value accounting is the solution to allow public companies to hold this in large quantity. This is why, say, even a Tesla or a Square would buy not 100% of their balance sheet or 50%, but 5%.
Yeah.
If it's 5% or 1% or 2%, it's not going to be material to the rest of the P&L and the rest of the balance sheet treatment. When it becomes 50%, the volatility from the accounting treatment will optically impair transparency against the P&L and the rest.
So when I look at the public companies right now, let's put aside the kind of Bitcoin or crypto native companies, the miners and Coinbase, et cetera. There's basically 3 publicly traded CEOs that are orange pilled, right? Yourself, Jack Dorsey, Elon Musk. Those seem to be the ones who have purchased Bitcoin, who have talked about it publicly, who appear to understand the ethos of it and kind of why it's important for their businesses. Is this something where we are literally going to see one by one, each individual CEO is going to have to get orange pilled and eventually make this decision? Or is there some milestone or like inflection point where you say when X occurs, we will then see, on a quarter by quarter basis, tens of publicly traded companies or hundreds of publicly traded companies all going ahead and doing this?
Okay, well, first I would say it's not just the 3. There's probably 3 dozen, but every Bitcoin miner is holding Bitcoin on his balance sheet. And one of the major things, one of the catalysts that's taken place in the last 12 months is all the Bitcoin miners coming public, and all of the miners that were public on international stock exchanges shifting over to the NASDAQ and the New York Stock Exchange, right?
Correct.
So Marathon and Riot. And actually, if you look at it right now, Marathon has got a Bitcoin exposure. I wonder when Silvergate Bank will, right? Or how that'll work. But Silvergate's obviously a Bitcoin company. Coinbase has got Bitcoin on its balance sheet, right? You've got Bitfarms, Hut 8, you've got Sphere, you've got Bit Digital, you've got Galaxy, you've got...
Well, there's a bunch of businesses that come out of the industry,
Argo.
and I think we're going to see more and more go public. So let's say that number doubles or triples of like the publicly traded companies that come out of the Bitcoin and crypto industry, because you're just going to get a bunch of startups that continue to grow and eventually go public, whether it's direct listings, IPOs, or SPACs. That number will just grow.
And I think there's a dozen other companies that are public that are holding it in their treasury at a smaller amount. So what are the catalysts? I mean, clearly, one thing that's already happening, right, is the regulatory clarity that's coming. The more clarity, if the regulators move forward and they clarify the treatment of stable coins and security tokens and DeFi exchanges, I feel like the connection of Bitcoin to crypto has been holding it back, right? Because stablecoin regulation is unclear. Many cryptos are security tokens. That's holding us back. The exchanges that are trading Bitcoin while they're trading security tokens, right? The connection of Bitcoin to SHIB or Dogecoin, right? This holds back a public entity from wanting to get into that space. I mean, in fact, it's really the express concern that the SEC has about approving a Bitcoin spot ETF, right? Which is they're